Hey there, everyone! Welcome back to our channel. If you're new here, I'm your name, and today we're diving into a topic that's super important but often misunderstood: the risks of co-signing a loan. Now, you might be thinking, what's the big deal? Or isn't co-signing just helping a friend or family member? Well, stick around because by the end of this video, you'll have a clearer picture of what it really means to co-sign a loan and the potential pitfalls that come along with it. So, let's start with a key question. What does it really mean to co-sign a loan, and why should you be cautious? First things first, let's break down what co-signing a loan actually entails. When you co-sign a loan, you're essentially agreeing to take on the responsibility of repaying that loan if the primary borrower fails to do so. This might seem like a straightforward way to help someone who may not qualify for a loan on their own, but it comes with significant risks. Let's talk numbers. According to a report from the Consumer Financial Protection Bureau, nearly 30% of all co-signers end up having to make payments on the loan because the primary borrower defaults. This could mean thousands of pounds out of your pocket, not to mention the impact on your credit score. Imagine your friend wants to buy a car but has a limited credit history. You co-sign a loan to help them secure financing. A few months later, your friend loses their job and can't make the payments. Suddenly, it's you who's on the hook for that monthly payment. If you miss a payment, it could hurt your credit score, making it harder for you to borrow money in the future. Now, you may be asking, how does my credit score get affected? Well, when you co-sign, the loan appears on your credit report as well as the primary borrower's. If the primary borrower makes late payments or defaults, it can lead to a drop in your score. A study by Experian found that a single missed payment can lower your credit score by as much as 100 points. That drop can have serious implications for your financial health, especially if you're planning to apply for a mortgage or another major loan soon. If the primary borrower struggles to make their payments, it can lead to tension in your relationship. Money matters can be tricky and mix in a little stress from financial obligations, and you've got a recipe for conflict. Let's say you agree to co-sign for your sibling's student loan. They get overwhelmed with their studies and end up missing payments. Now, you're not only financially responsible but also dealing with the emotional fallout of having to confront them about it. It could lead to resentment, strain your relationship, and even create a rift in your family. When you co-sign, you have very little control over how the primary borrower handles the loan. You might trust them completely, but life can throw curveballs. They might miss payments, consolidate debts, or even declare bankruptcy without consulting you. What if your friend decides to take out another loan without telling you? Since you're a co-signer, their debt-to-income ratio is now higher, which could affect your ability to secure a loan for yourself in the future. Lastly, let's discuss the legal implications. If the primary borrower defaults, the lender can pursue you for repayment. This could even lead to legal action if you refuse or are unable to pay. According to legal experts, lenders can file a lawsuit against the co-signer for the full balance of the loan, plus any fees incurred. This isn't just a financial headache, it could also lead to court appearances and additional stress. So, what's the takeaway here? Co-signing a loan might seem like a kind and helpful gesture, but it carries significant risks that can impact your financial health and personal relationships. Before you agree to co-sign, consider discussing the situation with the primary borrower. Make sure they have a solid repayment plan, and think about your own financial situation. Remember, it's always better to help someone find another way to secure financing, like improving their credit score or saving for a larger down payment, rather than putting your own financial future at risk. If you found this video helpful, don't forget to give us a thumbs up and subscribe for more content on personal finance and smart money management. And feel free to share your thoughts or experiences with co-signing in the comments below. Thanks for watching. And until next time, stay informed and stay financially savvy.